Joining us now is Laurence Schreiber of Clarity Capital for a view on investing and the all-important Powerball jackpot taking place across various states in America. Thanks very much for being with us today.
Oh, thank you for having me back.
Well, from a financial advisor's perspective, how would you advise the winners of the Powerball jackpot?
Sure. First of all, I'd say congratulations. It's a pretty exciting turn of events. As you may be aware, this was the largest lottery winning ever in U.S. history, over $1.5 billion, which 3 lucky people are going to split. We would certainly advise them the first thing to do is to pause, think, because obviously when someone comes into a financial windfall, their initial reaction might be to do something rash. And first of all, we'd say you've got to stop and think and get good advice. And secondly, start thinking about taxes, because certainly people never think about taxes in that moment, and it becomes a big problem quite often down the road.
Are there any broader lessons we can learn about coming into a sudden financial windfall?
Absolutely. You know, it's something that doesn't get discussed very often in the world of finance, but at Clarity Capital, we see it fairly often. You don't have to be a lottery winner to have money kind of suddenly appear in your life from time to time. We see it because someone wins a legal settlement, or because maybe they invested in a small company years ago that now does an IPO and they have some newfound funds. Or finally, quite often over time, people get an inheritance. And we see that people all of a sudden have money that they didn't expect to have or they didn't know was coming. And we have to advise them on what to do with it. It's actually more of a fairly common problem than you might, or opportunity, I guess I should say, than you might expect.
Well, what financial advice would you give to someone coming into money?
So that's a great question. The financial mathematics, if you look historically over lots of time, tends to say that you should go ahead and, first of all, obviously think and build your diversified investment plan, but go ahead and execute it right away, meaning invest in the stocks and the bonds and the currencies and the commodities and the real estate with an advisor to get your nice diversified exposure. You don't put all eggs in one basket, but you shouldn't wait. You should go ahead and do that as soon as you have your plan in place, and obviously keeping taxes in mind. But what we found after doing a lot of work with our clients is that that's probably not the best approach. Because what happens is psychologically, if you make all of your decisions immediately, even if though over time that's probably going to be the better financial decision, if you were to make a significant allocation of most of the new money, and then we get into a period like today where we're seeing markets pulling back, you're going to feel so badly about it that you might be tempted to reverse decisions and make bad choices, which won't benefit you in the long run. So in fact, what we advise people is to come up with a steady plan over time and make those allocations in a thoughtful way over a relatively long period of time. It could be a year or 2 years of steady investment.
All
and
right.
even though
well, thank you very much for bringing that to our attention. We do appreciate it.
Sure.
Moving on now